Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, percent comparison, how we find the models, and the forecast model for gold miners. So back to the technical analysis. Today we're up 8.7%. On the 1 hour chart, we are at overbought RSI. We are now positive on the 1 hour MACD. If we expand out further on the 4 hour chart, we were oversold on Thursday and Monday, and we see a nice reversal over on Monday and Tuesday. If we expand out to the daily chart, we were oversold on the daily RSI, and we still have not seen a convergence on the daily MACD, so there's a big concern there, and we also encounter resistance at the 9-day moving average. So it is still too early to see that we will encounter a full reversal. We still need to close above the 9-day moving average, this blue line. So if we do manage to close above it, the next resistance will be the 200-day moving average and the 18-day moving average, the green line and the purple line, which coincides around the price of $27.40. And if we were to reverse and head down lower, the next support, we made support back on, I would say it was Friday, and Monday we made a reversal. We found support around the price of $16.70. So it is quite a large range to consider it, and it is also quite impressive the amount of percent movement. I would say 50% down and 30% up. It's quite volatile. So if we were to move up higher, that price movement is roughly around 11.3% to the upside, and to the downside it is around 30% or 32% to the downside, where we left off on Friday and Monday support. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress, we have on the 7th day, we have a 50% chance for gold miners to climb higher between 0 to 6%. And we have a 25% chance for gold miners to fall lower between 0 and 6% or negative 6%. And if we expand out further on the extreme cases, we have a 13% chance for gold miners to fall between negative 6% and negative 12%. And further out, we have a 12.5% chance for gold miners to fall between negative 11% to negative 19%. So let's head to the day-by-day forecast for gold miners. So what we have is 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So what we have here are the models that which one of these models we should consider looking at. Ideally, the model that is best matched to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to, let's say, August 2nd, 2013 to May 12th, 2008. Actually, that is wrong. I should say, yeah, August 2nd, 2013 to October 28th, 2013. So let's examine that. So what we have here on the current trend, we start off taking a dip slightly below the middle Bollinger Band. We made a reversal to touch the upper Bollinger Band, and we once more proceeded to touch the bottom Bollinger Band. Let's just mark all the instances where we touched the bottom Bollinger Band. So we have one there, second one there, and finally the last one where we left off on Friday and Monday. In between, we see a reversion to the mean hitting the middle Bollinger Band. So we have those points there. We see a slight reversal, possibly reversion to the mean, so let's consider it. So what we have are those points there. And in the trend in question, we start to see similar pattern. We start off below the middle Bollinger Band, see a reversal touch the upper Bollinger Band only once in these trends. And then let's just mark all the instances where we touch the bottom Bollinger Band. We see the second one there, the last one towards the very end. And finally, let's mark all the instances where we revert back to the mean or touch the middle Bollinger Band. So we have our first one there. Next, our second reversion to the mean. Do take note that at this instance, we do manage to reach at the middle Bollinger Band compared to our current trend. We still have quite a bit way to go for the trend to happen. And what we have is 1, 2, 3, 4, 5, 6 points. We also have 1, 2, 3, 4, 5, 6 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was August 2nd, 2013 to October 28th, 2013. Back then, gold miners continued to fall around 7.2%. So do take that in consideration that we have not reached the middle Bollinger Band yet. So the percent movement to the downside might be less, since on the trend that we just examined, we reach that middle Bollinger Band. So do take that into consideration, and let's examine the percent comparison. So what we have here in the current trend, we have a 25% down from monthly high, 24% higher from monthly low, 3% down from standard or 10 simple moving average, 9% down from 20 simple moving average, and 12% down from 50 simple moving average. So the trend that we just examined was August 2nd, 2013 to October 28th, 2013. Compared to the current trend up here, we have a 15% down from monthly high, 13% up from monthly low, 5% up from simple moving average 10, and 8% higher than the 20th simple moving average, and 1% up from 50 simple moving average. Do consider that right here we are in the negative below these simple moving averages, and on here we are above. And again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.